Good evening, everyone. Time for another silver update. This is the 8-hour chart of silver provided by netdania.com. You can click on the link below. Now I've got some lines drawn here. The primary downtrend line back from early fall of last year, and then a steeper line starting off in late November and December. And of course, I haven't drawn in yet, but there's the line that we've just recently taken out with this new low. And so the question is going to be, what is the significance of the volume that we've seen? Now, again, the debate rages on about are these contracts. I don't believe they're contracts. 1.5 million multiple time contracts. We're talking billions of ounces of silver. I don't know what they are. I know that NetDania has multiple sources. You can get the COMEX volume, and you can watch Harvey Organ. But on a relative basis, the volume is very, very large. So I wanted to compare it to the last time we had a takeoff. You can see that we had kind of this pyramid formation on the volume. How is this pyramid volume going to pan out? We don't know. But you can see that after that volume came in, that's when we got the takeoff point. Of course, if we turn down from here and we go below this line, $28, if we cross that line, that would be an extremely bearish indication, because that would put all this volume on the sell side. And so my projection is that this is actually buying volume, and that we may see a very rapid advance, something like this, in the future. The other thing we want to note real quick here is the MACD. We'll go ahead and pull off all the indicators and pull off our line here so that we can get really close to the MACD and see what it's doing. And you can see on the daily, and we don't get that many daily crosses on the MACD. You can see if we count them, we had the major one there, a lot of flip-flopping, another major one there, there, and some noise. So you can see of recent time periods, we had a big cross here, and one here, and now we're just, if we go way in and take a look, we want to look really closely, we can see that we do have a cross of the MACD. So does that portend a violent rally? It could, especially when we combine that with the fact that we have this, as someone has pointed out, I believe it's on an earlier chart, but we did have this engulfing candlestick, and let's point that out here. This candlestick here is considered an engulfing candlestick, because you can see that the low on this candlestick and the high on this candlestick exceed the prior candlestick. I don't attach a lot of importance to candlesticks, but there are a lot of people who do. So we're watching to see if this is going to be the bottom or if we roll over. That's really important. So before we get to the main topic of the night, I wanted to take you over to a news story that just hit the wires about 2 hours ago. And this is the Fed's stress test. You know the typical media speak. I'll read a little bit of it. Washington AP, the nation's largest banks are more prepared to withstand a severe U.S. recession and a global downturn than at any time since the 2008 financial crisis, the Federal Reserve says. The Fed's annual stress test showed Thursday that as a group, the 18 banks hold fewer bad loans compared with last year, helped by a stronger economy. The Fed will announce next week whether it will approve banks' plans to issue dividends or repurchase shares, and it goes on. So the only reason I read this is to show you the comments, and I really go to the comments after reading a snippet just to see, because of course most of the wisdom is going to be in the comments. So just to give you a sampling here. This is nothing that I planned. This is just a story that I read. This is what I do every day. Follow the news. But for those of you who think that the people who read and the sheep, or the sheeple as some refer to them, don't get it, don't understand, and that America is a nation of dummies, I don't know if that's true or not, because if we look at the comments here, you'll see that it's very one way. So let's read some of the comments about this story of the Fed's stress test of these banks, and we'll just read a few of these. So Lance says, I guess so. The Fed gives them 0% money. They can lend 10 times the amount. The Fed buys their mortgages at 100%. Garbage. An idiot could make money with that deal. Sniper says, it's called life support in the medical field. It's called getting a fix into hood. It's called sucking up the wealth in plain English. Baratus says, lol, oh, surprise. The Fed covers up all their mistakes and fraud, offloads toxic assets, then stuffs them with billions of free money, and has them invest in a market it guarantees won't go down. Lol. And then he gives them answers to a test they wrote. Oh, surprise. They pass. Brian says, GDP growth under 1% is not a strong economy. Inflation and population growth make this a much weaker economy than most pundits will admit. John Smith, of course they're in a strong position. They get billions in virtually free money from the Fed, and they can mark anything on their balance sheet at a fantasy valuation. What a joke. Stress test, sure. We'd all be stress-free with free money. Alex says, the strongest since 2008. I don't know if the Fed has noticed, but the banks folded like cheap lawn chairs in 2008. Are we supposed to be encouraged that they finally fought their way back to that level of strength? Beartooth, would average Americans pass the stress test if the Feds covered up all their mistakes, loaded them with cash, and then directed them to a free stock buffet? Lol. Laughing. This is funny. TC, great news to see the banks are doing a lot better with our taxpayer money. When the next crash comes, we might not have to pay as much to bail them out again. Sarcasm intended. And, but not too big to fail, BOA. And Jason, I'm so happy for the banks. Yay. So that actually is a random sampling of the comments on this Yahoo story. Maybe that's the reason why Yahoo shut down their comments for a couple of years. So I'm not going to write off the American people yet if that is a representative sample of what they actually think. So let's go over to some questions. We're going to go into the main story with Drutter, but before we do that, let's take a look at one of these questions here, and that's Who Rules the World by George Silver. Hi, Brother John. Who runs the world? Look at the nurse's belt, and we get an article with the Queen of England and a Masonic belt. Of course, our triple play people are looking for something to happen because they're connecting the dots of the Pope stepping down, Chavez dying in Venezuela, and maybe the Queen stepping down or something. No one knows. So anyway, this is all speculation. So some people think it's the Masons, some people say it's the Jews, other people say it's the Muslims. A lot of people say a lot of things. I honestly, to tell you the truth, don't know the answer to the question as to which groups are the most powerful. I will say this, though, and here's David Icke, who has his reptilian theories. But I will say this as just sort of a guidepost for those of you who are trying to chase these trails of rabbit holes and things, is that I would just say that a sort of common sense observation would be that the people who are most powerful in the world, the people who completely rule the world, would be the people that you don't hear about. So I would say that the people you hear about the most as being the ones who run the entire world would probably be least likely as being the ones that rule the world, and the ones that you never hear about are probably the ones who have the power to keep their name out of the media. Somewhat similar to the richest people in the world. You always see Bill Gates and Carlos Slim, but you never hear about the Rockefellers and the Rothschilds. So that's my observation on that. Now let's get over to the Drutter video, which I think is really important. This is from Agent 47. Drutter first made the discovery that until recently, demand of U.S. Eagles at least has roughly tracked the price. As the price went up, buying went up, and as the price got smashed, less Eagles were bought. This year, looking at the charts, Drutter shows there's been a clear divergence as the price got pushed down. The demand for Eagles is going straight up. Is Drutter onto something? P.S. Something I've noticed is most bullish silver channels like Brother John F., Drutter, Chris Duane have calm, reasonable sounding voices. The silver bashers have wildly emotional voices at times, like Don Harold, Raw Dog, Silver Futurist. Why do they feel so emotional about bashing silver when the silver bulls have calm voices? I don't know. You'd have to ask them. I don't put Silver Futurist in that camp. I certainly don't think that he goes crazy on things. He may get a little bit excited. But the others who delete their channels on a regular basis, I don't know. You'd have to ask them. But let's go and look at the Drutter video, because I really do think that Drutter is probably onto something here. So just to give you a brief preface, what Drutter has done is he's taken the raw numbers from the mint, and he's taken the raw silver prices. He's adjusted them so they fit on the same page, sort of thing, by a ratio, and then he's going to show us a divergence. So let's listen to him for a bit here.
I found this rather simplistic graphing website. I'm sure there's a lot better sites and a lot better free software I could download if I wanted to do professional graphs, but this suits my purposes for now. So what I've done is I put in the years on the left-hand side from 2000 to 2013 inclusive, and then I've put the sales from the US Mint's website here in millions, 2.7, 2.4, etc., all the way down, and the projected totals for 2013, including March's projected total. And then on the right-hand side, this is the high silver price for the year divided by 4 so that it fits on the same graph. That doesn't change the data or manipulate anything in any way. That just allows the graphs to be compared on the same page. And what do we get? This is a little small, but I'll blow it up and show you. The data is telling me a couple of things here. One of them is that people who buy silver buy when the price is up. Unfortunately, I've noticed that before, having some experience with buying and selling myself and buying and selling to and from other people. I have noticed that people get interested and stack silver more often when the price is high. I think that's kind of unfortunate. But that seems to be the way it is, and I think it's like that with a lot of other things. I imagine that Bitcoins, now that they have reached an all-time high, will reach a new all-time high. Perhaps so will the Dow, as the mainstream media is pumping it into the news that the Dow is making new records, and I think that will bring people in, unfortunately, rather than signaling to people, hey, it might be overpriced right now. But that's just how it goes. And the other thing this tells me is that we've had a divergence in the graph. See, it looks like the silver price and demand for silver follows very, very, very closely, including to that peak in 2011 at $50 and the pullback last year. We've had a further pullback this year. The highest price we had so far is about 32 bucks. So it's registering right here at the 8 mark because I divided everything by 4. But the demand is nowhere near that. In fact, the demand is significantly higher than the demand even in 2011, which was a previous record. So it looks like we're on par for a record year. In fact, perhaps 20 or more % higher than any year previously. So demand is a lot stronger compared to price than it ever has been in the past. I will allow other people to draw their conclusions on that, but that's what the graph is telling me.
So very important observations I want to comment about. First of all, When we look at the graph, we can see that there is a divergence, and the rapid price rise in silver actually responds based upon the size of the divergence. You can see here at this opening yaw, wide mouth yaw that we have here, that we may be potentially looking at an explosive move. You can see the move right here after the most recent divergence before this one was an incredible move up. So what are we going to be looking at in the future if this pattern continues? The next observation I want to make is the point that he makes about the idea that buyers come in at a higher price. Now that is the sort of thing we've discussed before, with whether silver is a given good and whether it's my analysis. I came to the conclusion that it actually was more like the bandwagon effect. Now we know with the Mayday panic by the silver manipulators, if you remember the Mayday high, which coincided with the capture of Osama bin Laden, the release of Obama's birth certificate, and 5 consecutive margin increases on the COMEX late at night with a very large smackdown on the price. That was a very important point in time, and it seems to me that those indicators show that the price of silver is actually more of a bandwagon effect price, in that once that nominal $50 high is taken out, that's probably going to attract a lot of attention, and that's the kind of attention that the silver manipulators would not like to see. So excellent observations by Drutter. I think he's really onto something. A lot of us have projected that at some point in the future we will see a disconnect between the paper and the physical price. I think that we're going to see at some point a battle between the stackers and the manufacturers, and they're going to be fighting over the metal. And when that happens, of course, we've had some indications of that some of the manufacturers, I think it was a story from Silver Doctors where we saw a vault in Europe where apparently the silver was being stored in the same area that the central bank's gold was being stored. Silver manufacturers' silver was important as central bank's gold. So when that happens, I think if we get a battle between the stackers and the manufacturers over the physical silver, then we may be looking at a price event that no one can fathom. And we'll talk to you next time.